Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, welcome to the week that was, the weekly podcast that sums up market movements and events from the past week along with their implications on asset markets. I'm Michelle Castellino, your host for this week's episode. Starting off with key global market updates, the Fed held rates steady in a 9-3 vote at its policy meeting last week, with three policymakers voting in favor of a rate hike, marking a shift from the unanimous decision to hold rates in June under new chair Kevin Walsh. Money markets trimmed year-end hike expectations by about 10 bips, pulling short-term yields lower, but the 10-year yield still rose 5 bips and the 30-year jumped 10 bips to 5.22% post the Fed meeting. This was its highest since 2007, on concerns that Walsh isn't fully committed to fighting inflation. In our view, Fed is likely to hold for the rest of the year and cut in H1 2027 as inflation eases with easing in crude prices. Now, moving to key India macro updates from the last week. Industrial output was a standout print, with the index of industrial production climbing 7.3% year-on-year in June, a marked pickup from 5% in May, as manufacturing growth strengthened to 7.8% from 5.2% in the previous month. Government finances told a mixed story. The fiscal deficit for the first quarter of FY27 came in at 3.08 lakh crore, or 18.2% of the full-year budget estimate, a touch wider than 17.9% recorded in the same period a year ago, with the total spending at 13.57 lakh crore or 25.4% of the budgeted estimate. On the positive side, direct tax collections grew 11.7% year-on-year, supported by strong corporate tax growth, while capital expenditure remained robust, rising 24% year-on-year on back of higher spending on defense, railways, and loans to states for capex. Now, turning to Indian markets, it was a strong rebound week after the prior week's losses, with Sensex and Nifty rising 2.68% and 2.59% to close at 78,095 and 24,384 respectively, while the mid and small cap indices gained about 2.1% and 2.46%. The rally was supported by strong Q1 FY27 earnings from heavyweight companies, renewed foreign investor inflows, a firmer rupee, and a decline in crude oil prices, which eased concerns over inflationary pressures and input costs. On the sectoral front, IT rallied 6.7% as investors rotated back towards large-cap Indian technology stocks amid heightened volatility in global AI and technology names. Auto gained about 5.6%, supported by a favorable business outlook, encouraging management commentary, and expectations of sustained volume growth backed by strong rural demand and increasing electric vehicle adoption. Most of the other sectors also ended the week in positive territory, with utilities, capital goods, and energy, which were marginally down, being the only sectors to end the week in red. The rupee strengthened over the last week, with the USD INR easing about 1.22% to close at around 95.39, a reversal from the recent weakness. Crude oil fell sharply, down 6.88% for the week, as the suspension of hostilities between US and Iran boosted hopes of a diplomatic resolution to the Middle East conflict, easing the risk premium built into prices. This helped ease bond market nerves, even as the 10-year benchmark yield ticked up about 1 basis point to 6.84%, with the yields initially moving lower by the same de-escalation hopes before reversing on renewed Fed rate path uncertainty. Lastly, an update on INR gold. Domestic gold prices declined 0.66% last week as a stronger rupee and softer global gold prices, driven by the reduced expectations of any near-term Fed cuts, weighed on the domestic prices. That's all for this week's edition of The Week That Was. If you found this update useful, don't forget to like, share, and subscribe. Thanks for tuning in and have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.